Well, welcome to everybody. Good afternoon. Welcome to the live trading room, yeah? It's good to be with you here this afternoon, ladies and gentlemen. It is 2 minutes after 2. Ashley Reeve here. Before we get started, please remember the information we discuss in this video is opinion and should not be construed as advice in any way. A very good afternoon to everybody. 5th of February already. It's good to be with you here this afternoon. Like I mentioned earlier, Ashley Reeve here, guys. This is the live trading room. We are streaming live on YouTube. I see the guys in the chat facility rather. Tato's there, Kawa's there, Sandile. I have Jules in there as well. A warm welcome to you. If you're going to be joining a little bit later on as well, I'm definitely going to say welcome to you too. All right. Guys, just before we do get started there, just remember that if you'd like to obviously open up an account with us, you can visit www.tdmarkets.com. You can also email us on care@tdmarkets.com. You'll see our marketing team has graciously placed the links for you in our chat facility. So please make use of them if you are not a family member yet, yeah? We've got quite a bit to get through today in terms of looking at a bit of charts and see what's happening on the technical side of things. Yes, I'll be chatting about a few fundamental factors as well. That's key. We got to do that. But we also got to make sure that we lay down the information on some of the setups that we're seeing here. All right. So without further delay, let's get started. Yeah. Netta, I see you after a long time. Good afternoon. All right. All right, first things first, guys. First things first. Let's get over to the Euro USD. We're looking at the dollar at this moment in time. Euro USD. A very, very interesting one here. For me personally, guys, I'm a bit disappointed here, though, with the technical moves. As we do know that there's been a lot of political interjection and a lot of uncertainty, coming up in the first month of the year. We've had a couple of, sessions already, knowing that there's been quite a bit of a scuffle going on, and from Venezuela to Greenland. If you've watched Davos 2026, you'd notice the kind of topics they had there, the kind of content they shared, content from AI to what it's doing, where it's developing towards, to cryptocurrency, the usage of stable coins, which is something that obviously we have at TDME, which will have a beautiful breakdown tomorrow in our Crypto Decrypted. We'll chat about stable coins, why it's so important. And we'll do a bit of technical analysis on that one as well. And then obviously, from stable coins, we move then, to the fiat monetary system, where we're chatting about the different currencies, more so the dollar, the current condition and status and position of the dollar, and the value that it has, that it may not have, the future, the possible non-future of the USD, different presidents chatting, different industry leaders speaking about it as well. And it provided quite a bit of insight, guys. And, we need to, as traders, start looking at those that kind of content, because that is going to solidify what we do on the charts. All right. So we want to try and capitalize on some of that now. All right. So let's maybe just start off with the Euro USD. I'll be chatting a little bit about the dollar, and the Eurozone just for now. There's obviously a lot happening in the Eurozone as well. Obviously, you are seeing that from a economy perspective. Germany is the biggest economy in the Eurozone, massive. And so the production is incredible. And there is some slowdowns, and there isn't. I know that last year and even the year before, we had quite a bit of a very, very weak economy. But since then, there's been quite a bit of movement. And one supposes that or suggests that this does happen. It's trading. One, couple of months you'll be up and the next you'll be down. But let's quickly get into some of it, guys. Just the Eurozone retail sales, perhaps just starting off with that, the slowing down, of consumers and perhaps the activity. Retail sales in the Eurozone did fall by 0.5% in December last year. It's reversing earlier modest growth and below a lot of the expectations. And this does matter quite a bit because retail sales measure how much people are spending in the shops, and it's a key driver of the economy. And a drop means that consumers are obviously tightening their belts, and the impact of it is that Europe as a continent there, and the growth and the economic growth of it, it's slower consumer spending simply means a weaker economic growth. Now, this may not be long term, but it definitely has a short and maybe even medium term impact. Inflation, they could ease, inflation if the demand weakens, and the stocks, as well as the European Central Bank, the weak retail data may make the ECB more cautious about tightening those interest rates. And then, moving over to the dollar, we already know what's happening there. We have, Trump wanting to, cut those specific interest rates. He's already brought in a new, federal chair that is more of a hawk than he is a dove. And, we haven't seen any action yet. So the next FOMC meeting is going to be key because we're going to start seeing what is actually happening there. How does he think? And I think T mentioned it quite nicely in one of the opening bells this week, that is something that we're looking forward to. So on the technical chart, with the euro coming down, and losing a little bit of influence, and not that the dollar is strong because the dollar's been weak. We're looking at the technical side here now. So maybe if I can just tell you why I'm a bit disappointed. I was looking at this on the 15-minute frame, and from a setup perspective, guys, it had ticked all the right boxes over here. So we had obviously come down in this channel, as you can see here, that black equidistant channel, that technical tool. And we had come up again in this 15-minute here, and we've gone up and closed above. But, obviously, I don't think it was enough power to drive the euro up further. So it actually closed beneath this very, very important structure over here. And lost quite a bit of momentum there, and then we continued to see the euro push down further. Now, that doesn't mean that the setup is no longer valid. It just simply means that right now the delay was there. All right, so for the guys that are watching right now, I'm going to redo this one for you in real time so you can see what I'm actually looking at and why I'm seeing that there could be a bit of a bounce and for us to push up a little bit despite the slower spending of the consumers over there. We still see some technical moves here, all right? So first things first, guys, if you do look at it from a more overall perspective, we are absolutely bullish here. The strength of this chart is to the upside. The only thing that is giving pressure here from a seller's perspective, it is below the 70 mark on this oscillator. Now, guys, I'm using this one oscillator. There are various types of oscillators, all right? I'm just using this one because it's quite easy to understand, especially for beginners. And so this specific oscillator here has the zone there of 70. It's called the Relative Strength Index, or short RSI, and I'm sure there's many other guys that do know it. And again, I'm using it because it's very easy to understand if someone explains it to you correctly, like us at TD, all right? So you can see that it's beneath the 70 mark. Now, this scaling works in this way. From 0 to 100 is the scale, all right? Then there are various pivot points on the specific indicator that alerts you to tell you, listen here, we are overbought or oversold. Now, this is the challenge. If you look at the 70 mark, in which I'm now showing you with this little arrow here, that is the supposed overbought area. Now, if price is above the 50 mark, it's bullish, yes, but it's below the 70. That's telling you that even although there are buyers in this market right now, or at least this asset, this symbol, this instrument here, there is a lot of pressure from the sellers as well. If this average was above the 70, then the long would have came a long time ago. Excuse the play on word there. But because it is above the 50 and below the 70, it is floating. It is consolidating at this moment in time with the unequal strength of buyers and sellers. Because if they, let me rather rephrase, with the non-strength and the non-strength of buyers and non-strength of sellers, it is basically saying that there's nobody in control. That's the better way to say it, all right? But when price pushes up above the 70, it can stay there for some time. Now, please take note, the higher time frames is doing that. That's not the lower time frames that's doing that. All right, so I'm really going into a bit of detail here so you can understand when I do the other assets, I'll be approaching it in a similar way. That's a very, very important one. I'll say it again. I'll be looking at other assets in a similar way. We'll be looking at the overall strength of that specific asset, all right? But I'm taking time to explain to you so that when I go, not with quickness or swiftness with the others, but at least you'll understand why I'm approaching it that way. So if this average here of the RSI is above the 70, we're going to see far more buyers coming in on the shorter time frames, meaning the setup is easier to tackle and to get in. All right. Now here, there's no strength here from buyers or sellers. It's consolidating. And that's one of the reasons from this specific angle why you're seeing that price is actually just standing still here. I actually had to get out of the specific trade because I just didn't see the setup coming through anymore. From that angle, there's a very big chance, there's a very big chance, I beg your pardon, that price could come down again. But I'm not 100% convinced. That's why I'm going to leave it alone for now. We might find a much better example moving into some of the other assets. All right. So there you're seeing a little bit of divergence. It's not that much. All right. But there is a bit of a support that is forming here now. Now I cannot get into this at this moment in time, and I'll tell you why. Because this midway mark here is showing us that there's no baseline or support yet that is adequate enough for buyers to actually jump into this specific trade. All right, this is a very, very important one. I see Tehedo saying this Euro USD hurt my feelings, but yes, look, man, that's exactly why I want to get it in. That's why it's a very good example, right? So this midway mark here, this midsection here is zones that's giving us a support area. And there's nothing there yet. There's nothing there yet, all right? Nothing suggests that there's any support yet. Even if I go to the 3 hour, the 4 hour, all of it is below that midway mark. So there's no continuation yet to the upside. Let's go a little bit further down now. Look at the hour, all right? The hour tried to go up, but it failed, all right? And you can see we back down again. Look at this. So I'm looking for this specific average. I'm talking about now price, not previous price, okay? I'm looking for now price to be above that specific area. And you can see right now, 12 minute, 10, it's only the 10-minute frame right now. And I'm going to show you in the data window here that there has been a closing at 55.25. So if anything, the 55-point mark is there. So if we're going to get any movement, all right, to the upside, we're going to have to beat 1.17,960, and we're going to have to wait for an hour frame here, and I'll just place it there because what the hour frame is going to do, it's going to solidify the movement and the momentum to the upside. So I want to be waiting for an hour frame to push above this area over here before I get into this specific trade. There's nothing that I can do at this moment in time, guys, unless all of us gives, a couple of trillions, and then we can move this market together. That would be fantastic, yeah? I'm seeing T's in the trading room today. I got you, my brother. Good to have you on, man, as always, my bro, yeah? So what's important to understand is, guys, and I speak for myself and T here that is in the trading room, we need a couple of trillions, all right, to actually push up now. If we had it, we'd push up nicely here. We dominate the market here. So Euro USD was the prime example of it's not ready yet. It's still in the microwave. It's not a 2-minute noodle thing. 2-minute noodles don't take 2 minutes, by the way. It takes about 6 or 7 for those of you who are pros. But specialists will be able to tell me that it's me. Ash, you're lying. It's 6.5 minutes or 5.5. But then again, the debate comes in. How soft do you want it? All right, so it's important then to understand that we're not going to be doing anything on the Euro USD right now. All right, there's nothing at this point in time. Let's push over now to gold. Teachers, put in the chat facility there if you're with me, my brother. All right, so Let's now go to gold here, guys. Let's go and see what's happening with gold, because I know, as me and T always puts it, there's a lot of gold diggers. All right, we have them. They're right here. Now, what's important about the gold, guys, is that we've seen a fantastic push to the upside. I mean, it's needless to say the kind of movement that gold has done. It's a safe haven with the US dollar that has obviously, now become a little bit weak there. Sorry, I'm just checking something. Sorry, guys. We are seeing that many guys have actually pushed into the gold price. Interest rate cuts have been on the books and in the conversation, and we haven't seen anything that gives us an indication yet. But regardless, all right, the interest rates have not come yet. Now, technically, guys, there's a lot of profit taking that has taken place. You guys know from last year already, if you just take it from there to there, I mean, that is a 87% increase just in gold, guys. All right, I'm taking last year's push as well from this support. Let me actually take it from this support. From that zone, price never came back, went all the way up. That's 101%. All right, return, or at least value movement from gold, guys. That's insane. You're not seeing any red candles there. There hasn't been 1 month, last year, apart from this one over here. This was in July last year. It was the only, I'll say bad, all right, a poor month for gold. But there hasn't been one. And so many of the guys are seeing that, listen, let's get into gold now. Let's buy. That's true. Gold is fantastic to purchase. It's an appreciating asset. It's safe haven. But then there's some of the other guys that are day trading, and they seeing the weakness in the intraday movement, which we are now going to. But before I do that, let me restart this for you guys so that I can go through it with you as well. All right. So from a monthly perspective, guys, all right, from a monthly perspective, now here is the point I made just now. Look at the average. It's above the 70, way above the 70 there, which tells you that this is absolutely very strong. So which means the sellers will not be dominating here for a very long time, all right? They are not going to be dominating here for a very long time. So as we proceed down now, that is what we want to try and find, all right? We want to try and find this average, finding some support down on one of the time frames so that we can obviously find the continuation to the upside. So watch as Ash goes to work. Look there, we're coming down now. I need the average to touch the middle. So I need this average here. There's the first support. Oh, man, I hope you guys are getting this gem right here now. T, are you there? Tell the guys, man. I hope that the guys are getting the gem now, all right? So one support is not enough. The first support leg was already formed here. I'm looking for a second leg. Hope you guys are catching what Ash is trying to tell you right here, all right? So we're looking for the second leg of support. Now, that's the average. We're looking to see where it's going to be. All right. So look, 3 hour, 2 hour, 1 hour. It's not there yet. Pay attention. This is the first leg. It's there. Pay attention. You can see this is the entire support area. It's one leg. That's one leg. Second leg has already formed. It started to form. Let's see. You see, there was 3 touches on that first support there. Look at that. 1, 2, big touch. Actually 4. 1, 2, 3, 4. There's only 2 here. You see that? So now we're trying to find there we go. We're getting closer. There we go. See that? Now, I want you to really pay attention to what Ash is telling you now, because I've just proven the point. At this point in time, on the lower time frames, there is no signal for upside right now. Right now, there's no signal for upside. My trade that I have in as a buy is currently sitting in a deficit. I'm okay with that because I know that gold at some point we're going to turn up. So I need to wait. It might not happen, now, but it could happen at the US Open. Are we together? So if it looks like example, on the 1 minute or the 2 minutes, if we start to push up here and we start solidifying that specific move to the upside, we're going to see it. All right. So 1, it's nothing there. There's nothing here yet. Look at that. All right, nothing here yet. Look at the 2, look at the 3, and look at the 4. Nothing, there's nothing here that is pointing us to the fact that this leg is done. So I'm going to leave gold like that just for now, even although we know that gold will be pushing up maybe in a couple of days. All right, the same thing with silver happened here, guys. All right, let me go to the monthly. So you can see here we're actually coming down now. So what I'm going to look for is a support area. All right, you're going to see exactly the same thing. I want to find and see the first leg. There's the first leg. There's the first leg. It's formed. The second leg has not formed yet. The second leg, that's why you're seeing that movement there. And remember, if it breaks below that area, it just means that support is not adequate enough. All right. And when I say not adequate enough, I'm referring exactly to this first leg here, which is that one there. That's the support. If we break and we close beneath there, it simply means that that support is not adequate enough. We're going to drop lower, all right? Which means this average is going to stay at this ground level for some time. So here we go. It says, look at that. There's absolutely nothing. Look at this. Look at this. Look at that. We're not there yet, guys. Silver exactly the same. Yes, it's bullish overall, but we don't have any movement yet to the upside. All right, GBP USD also, look at that support, was broken. So there was not adequate movement here, and maybe just to look at some of the fundamentals in that specific place. UK politics. So the government borrowing costs hit a high of around 4.6%, and the FTSE 100, dipped a little bit. And the reason for that is there's a lot of political noise surrounding new appointments in the government, guys, causing investors to feel a bit uneasy. Additionally, in the construction industry is doing a bit better than before. It's still technically shrinking a little bit there, all right? And the impact of that is there's a lot of homeowners. The Bank of England capped those interest rates at 3.75%. High borrowing costs mean mortgages remain a little bit more expensive. From a business angle, companies are feeling slightly more optimistic, but they aren't hiring many new people yet, all right? And so this is a challenge from a UK perspective, and we're seeing the pound take a bit of another dip there. Look at that. So technically, guys, the only thing that we're actually experiencing here right now is exactly the same as the Euro USD. The higher time frames, it's just consolidating at this point in time. There's nothing that is moving it right now. We haven't seen a move yet. So what I can say to you though, if this average here does dip below this zone here, we're going to see a continued movement to the downside. All right, we're going to see a continue. So the moment this average, that one there, dips below, there'll be a continuation to about the downside. And that's when we can start capitalizing. Right now, there's nothing yet. All right, there's nothing on the GBP USD either. NAS 100 also, a little bit disappointed here as well. One would have thought there would have been a little bit more. And what's important then to understand, there's also earnings that is taking place. We had some good earnings. There's some big earnings still coming. We know the tech stocks is dominating this specific index. But again, guys, we had a chat on this, about the pause of the indexes. The overall movement is absolutely bullish. But right now, those interest rate cuts, it's almost as if the stocks is just waiting for those cuts. Now, when interest rates are cut, stocks generally go up. So we're seeing price now at this point in time. Look at that. From this specific place here, look at that. From that specific place, it's like there's a pause happening. But also pay attention to the fact that price is at all-time highs here with the NAS 100 as well. All right. So I hope you guys are actually catching what is happening in this specific session. There's a lot of movement, but there's no movement, if I can put it like that. There's a lot of movement, but there's no movement. If you're going to capitalize on pushing this to the downside, you're going to be dealing with a support area here now where price could bounce and you trying to sell down, but then price goes up because the monthly frame over here is at the 70. So price, the moment it dips in between 50 and 70, you're going into consolidation once again. So it's either from a consolidation, we're going to dip and continue to the downside, or you're not going to continue downside, we're going to continue to the upside. So we're going to wait for this now a little bit. Look at that. Look at the daily. It's already below. So it seems like there could be a continuation that is actually coming here. What I would say to the guys, though, this is a key part here, guys. This is a key area here. This is a key area. Right there. That's a key zone. So if you look at it from a daily perspective, hold on, 2, 3, 8, 4, 7. That area can be traded. So from this zone to that zone, all right? From that zone to that zone, all right? Price can be traded because from a weekly stance here, today's Thursday. So if by later today, when the day is closed and tomorrow, we could see some push down to about 23,847. But remember, the interest rate cuts have not come yet. All right? It has not come yet. So we're seeing a more of a technical move at this point in time, guys. This is more of a technical move at this point in time, not so much dominated only by fundamentals. All right, look at the US 30. Look at this. It's literally standing still where it is right now. All-time highs. So let's see quickly. Let's go to work. This is literally a correction. It doesn't look like one, but this is a correction. I'll tell you why. Look at this. From that zone there, this is a correction that's taking place. It just doesn't look like it. Look at that. That's actually a correction taking place at this point in time. It may not look like it if I zoom in. It doesn't look like it, but look at the strength of the chart. It's pushing to the downside. That's a very important point right there. All right, so if you're going to be trading this, you're going to have to then take risks because on the higher time frames, it's correcting. You may get and move and walk away here with a push to the downside, but the risk is going to be here. All right, let me show you. So yes, 4 hour, 3, 2, 1, 30 minute. All right, so I'll show you now. So the 15 minute, let's just close. Okay, so this is it right here. If you're going to be taking a short on NAS now, the 15 minute, this support needs a 1 hour actually to close beneath there, because that would mean we are breaking structure. That would mean we are breaking structure. All right, so we might just then push. Let me just see here. This would be the area. That would be the zone. If a 1 hour closes, that would be the target. Now, if you zoom out, that's all you're trading. You're trading the correction. You're trading the correction. It's not a reversal all the way down. It's not a reversal. We're not changing trends here. You'll be trading a correction or part of the correction, if I can put it like that. So a 1 hour time frame, which would then be at 1500 hours. 1500 hours. But it's going to be a risk because this price is correcting, and majority of the strength is still to the upside though. All right, so that's what we're actually dealing with now. All right, that's the US 30 over there. All right, and gas. I'm in longs here with the end gas, guys. I'm still waiting for this one to push up. The natural gas futures, it's a little bit unchanged. It's at the level of 3.45. Traders are waiting for the weekly report on the gas storage levels. Now, this does matter because strong global demand, especially for the LNG exports, is pulling lots of gas out of storage, potentially turning inventories below the seasonal averages. All right, that tightens a lot of the supply, and that can push prices higher if the demand does stay strong. So and secondly, milder weather forecasts, all right, reduce the heating demand. So this tends to lower the gas prices. So the price is stuck between strong demand versus weak weather, if I can put it like that. And the impact is simple, guys, on this one here is that, at a lot of the U.S. Energy markets, the gas prices may just rise if the storage drops faster than expected, which is what I am anticipating here with this specific trade. The global energy price as a whole, right? Europe and Asia does benefit from the U.S. LNG supply. It does keep the global, markets tight. And then lastly, maybe just to mention the inflation and the utilities, higher gas prices can feed into electricity and a lot of the heating costs, and potentially this then adds to the inflationary pressure. So I'm waiting then for the end gas to push up. We've had a bit of a dip from that zone. All right, so I got in just before it went up. It was fantastic, came down, entered another position. So I'm actually just waiting for price to push to the upside. And as you can see, there's a lot of divergence here. Right there, we have divergence. And we have a support that has already formed over there. So I'm still expecting it to go up and majority of it to go to this zone over here. All right. So there's really, guys, price is really just in limbo at this moment in time. I mean, look at the Bitcoin price as well, guys, just to give you some context here too. So we did a bit of research on it. We were looking for the floor of Bitcoin. And we had visited, the 2021 levels, and it's currently at a high at the 2021 levels at 69,000 per coin. It's literally there right now. It's touching it. Now we can go further into that specific block over there. It can, and then find support in the support level of 2024 July. All right. So it can find support here. So we can go into the high of 2021 and find support, all right, at this specific support over here. And that's around 59,000. Now, this is the thing. If Bitcoin drops, people that have been long, obviously, that's not going to be great. But then again, when you look at it from the other side, if Bitcoin drops even further, it just becomes cheaper. It just becomes a better buy position. The only thing that we're dealing with now is there's no floor right now. There's no floor. If you pull up the fib here, from that swing low to this swing high, all right, we're about to push into and touch the 61 area, which is the support of the 2024 year. So if we do push below that area, now we're going into a no man's land. Price can find support right there at 35,000. It's absolutely possible, guys. Are we together? Especially if the interest rates are cut and the dollar strengthens. Even although Bitcoin is similarly moving with the stocks at this moment in time, we saw some correlation with gold, myself and T, when we were doing the NFPs and the CPIs. We saw some correlation when the gold price went up against the dollar. We saw the Bitcoin as well. But, there's been a bit of a skewed correlatory pattern happening. So if the dollar strengthens with those cuts, this one could possibly come down. Again, there's two sides of the coin. All right. The guys that are obviously, long, they're going to suffer a little bit there if they're still holding their positions. But again, this is a risk asset. So guys will always leave the risk assets to go to safe havens. All right. When there's political uncertainty. So it's not something new in a sense that we don't know. But this is exactly what happens in the market, all right? But as you can see, guys, like at this point in time, midweek, moving into the latter part, there's not really anything that is standing out that is giving us the force to say, listen, we can go in. Yes, there's some movements on the 15-minute frame, the 5-minute frames, yes. But the risk is more so there because we're not 100% sure on the fundamental narrative, even although we have bits and pieces of it, all right? But it's not necessarily there where we can say, listen, this is what we're doing because of A, B, C, D. So at this point, from a gold perspective, we're looking for the second leg to develop for silver. We're looking for the second leg to develop before we take any longs. We're just waiting for the structure to actually finish. GBP USD, like I said, we could be finding a leg here. And, if the pound continues to weaken here, we're going to see something similar happen on the Euro USD. But I said to you guys that if I see a 1 hour here, it would be me buying into the weaker dollar and a stronger euro from where it stands now. All right. Guys, also, please follow all headlines every single morning to see any changes, because what Trump is obviously doing, he's shifting things around, and he knows why. He's shifting things around in his favor. He's making deals. He's mentioning tariffs, and tariffs coming from nowhere. You didn't even know that there was any issues, but then you see there's actually a tariff happening. And it's good when you see the movement, because that means all the movement from tariffs and threats and breaking news, all these things is creating structure. So I'm going to say that again. All the news that comes out, watch it today. Watch how the U.S. opens today. Look at all of the breaking news. Look at the movements, because what's happening, the fundamentals is creating structure. The more it moves up, it creates structure. Comes down, correct, structure is being created. That is giving us the structure that we will trade. So if there's nothing happening, it can take longer for structure to actually develop. So it's good that there is movement in the market, because it's creating the structure to trade, all right? But at this point in time, there's nothing that is standing out at this point for us to say, listen, we're going to get in, apart from the narrative, which is gold is still long, silver is still long, the dollar is still a little bit weak. There's a bit of corrections happening, but we are still long on those specific assets. All right. But from me here, guys, with the trading room, just past midweek over here, please have a fantastic week further. I will be on Crypto Decrypted tomorrow at 2 o'clock, and we'll be discussing some of the stable coins there and letting you see some of the setups on the cryptocurrency. It's going to be important for us to end of the week with that one over there. Ashley Revia, guys, I'm signing out. Have a fantastic one here. Was so good to be with you. Ciao, ciao.